As the US elections unfold, South Africa's recent local elections have yielded positive outcomes for the JSE and Rand. Investors are embracing the government of national unity, labeling it business friendly. The JSE All-Share Index has surged 12% this year. And joining us to unpack how the small caps have performed, we do have Anthony Clark from Small Talk Daily Research. Thank you so much for your time, Anthony. Now, we are nearing the end of another difficult year on the macroeconomic front, and we've had significant movements on the political landscape, which, of course, we are hoping will shift the economic landscape as well. So how have small caps performed this year, considering that they are the first to respond in terms of investor appetite when economic cycles shift?
Yeah, hello from windy Cape Town. Great question. Interestingly, it's been a tale of two halves. I was checking the data before we came on air, and year to date, the JSE small cap index is up just over 24%. The mid cap index is just up over 19%. However, if you'd actually bought the market literally just after the formation of the government of national unity, once the political system had settled down, since June the 10th, the small cap market's up 20.4% since June the 10th, and the mid cap market is up 20.4%, showing you that timing in the market is absolutely everything. So even though year to date, the small cap and the mid cap index are both up, strongly, significantly ahead of the Aussie, which is only up 16% year to date. If you bought literally since the early part of June, you'd have made all your money for the year. So we were sitting on dead money from January until June. Then we were off to the races, and the small and mid-cap market really started to run. But interestingly, in the last couple of months, having had very strong gains, the mid-cap market is coming off a little bit more than the small caps, and interest in the sector seems to be slowing down as we go into the pre-festive season.
Anthony, I'm wondering, with this outperformance of the small and mid-cap sector compared to the all-share, how then is investor appetite, particularly institutional investor appetite, considering the fact that it should be a no-brainer that actually this is where your money should be flowing?
Yeah, that's again a great question. Having covered this sector now for nearly 30 years, I've been through many, many cycles. And what I've seen since the mid-1990s is the underlying ratings valuation for the small to mid-cap sector has rapidly derated. I was going through my notes over the weekend ahead of an article that I'm writing. But when I first covered the JSE back in the mid-90s, an average PE stock for a high-growth small cap was around 18. It got down to between 3 and 5 during the COVID sell-off in 2020. And we're now back to an average of around 7, showing you how far the market has derated as a general lack of interest, particularly from the wider institutional market, has been pervasive across the universe in this country. Now, a lot of that has got to do with risk appetite. And of course, with the change in regulation, which saw institutions send more of their money offshore into rand hedge stocks, there has been a lack of interest in the general small to mid-cap market, particularly in the last few years. I have to caveat that with the liquidity in the market is also very, very tight. I was saying this morning to a CEO of a small cap company whose market value was just under 800 million rand, but the underlying liquidity in that particular company was probably only a few thousand shares a day. So if you were a large institution in this country, really liking, let's say, a high growth small cap stock, it would be very difficult to actually go into the market to buy a large tranche of stock. So sadly, the small to mid-cap market has become very centralized, and liquidity has become very, very tight. So the scale has moved into the mid-cap stocks, where there is a lot more liquidity, which means the small caps have remained to a certain degree on the sidelines, where only boutique funds and the private client market has really got involved purely because of liquidity.
And Anthony, I know that the JSE has had some movements in terms of listing requirements and just generally has maneuvered on ways to make the costs less for these small caps? Because, I mean, there was a time when they were delisting because the return just wasn't matching or surpassing the costs that, they paid to remain listed on the JSE. And I'm wondering if that maybe has filtered through to the small caps, where now they are more incentivized to stay listed, or even for some to list.
When I started my career back in the JSE, there were 800 companies listed. I think at the last count, there were just under 280. I went through the listings boom in 2005 to 2010, and there were companies listing literally on a weekly basis. I actually can't even recall the last natural listing we had in the JSE. We've had unbundlings like We Buy Cars, Zeda from Barlow's, amongst others. But actual new listings are very few and far between. A lot of it is to do with the valuations. Again, because of the derating of the market. If you were a family-owned business or a company that had been in private ownership for many years, why would you want to list right now in a market which is only giving you a valuation maybe 6 or 7 times a PE rating? Private equity companies are far more predisposed, because of their long-term nature, to actually pay greater numbers to take out private companies. And that's exactly what's been happening. So even though the JSE has had to move in terms of enabling companies to have much lighter regulation, much lighter listing requirements, you've still got to persuade these companies to actually want to list in a market where the underlying ratings remain benign. At the end of the day, if you're a family-owned company selling to a private equity company to mitigate legal costs, listing costs, and it can take between 6 and 12 months to list a company on an exchange. Why would you want to do that if you could sell the company quickly to a private equity company, which is what many companies have been doing, and or delisting yourself because the underlying market is not that attractive in terms of institutions wanting to invest? So whilst I commend the JSE for lightening regulation and changing the goalposts, we still have to persuade companies to actually list. And to date, that hasn't really happened. Maybe 2025, 2026, now that load shedding has ended and a stable government might see more listings. But there's nothing on the immediate horizon that I can see that would see a flurry of companies suddenly wanting to list.
And this isn't also an issue of visibility, right? Because, I mean, on the JSE, with what they've done recently, they've split the main board, where there's a general segment now for mid and small caps. There's also the alternative exchange, the AltX, and you also have bourses like the Cape Town Stock Exchange. So it's just not an issue of visibility at the moment. There is enough visibility, but there's still other stuff that needs to be done.
Absolutely. I think visibility has improved.
Yeah.
But saying that again, in my 30-year career, the number of specialist institutional funds that invest in small cap companies have dwindled. The glory days of having multi-billion rand unit trusts investing in small cap companies, those days are over. And I think there's been a fundamental shift in the investment landscape in this country. It's not to say that it's a bad thing, but I think in the small cap space, there are significant levels of capital interested in the sector, but it's now far more specialized. Again, an analyst like me wouldn't have a career for 30 years unless it was general interest. But now my underlying universe of coverage has shrunk, as has the investable number of clients who actually want to participate. Hopefully that'll change. But for that to change, we need more listings, and we probably need a greater level of uplift from the investment community. To date, that has not really happened. But we are early days in the GNU, early days in the economic uplift of this country. So hopefully things will start to change in the next couple of years, touching wood.
That's the thing, because for everything to change, we do need an uplift in that economic growth. Thank you so much for your time and really giving us insights on the landscape of small caps. That was Anthony Clark from Small Talk Daily Research.